Good morning, welcome to Goodwill. In this video presentation, we will see how we can trade in Nifty index futures and options. The chart you are seeing is the 7-minute candlestick chart for Nifty index futures, and as we all know, yesterday we had a very big selling. We will discuss about that later, but before that you need to focus on a particular zone. So these price actions happened in this month only. So if you see that the price took on December 9th, from December 9th till 16th or 15th, in that particular week the price maintained 13,420 as support, and it was consolidating within a range, within the range of 13,600 and 13,420 and 460. After taking a good support within this range, the price went and moved up. So you need to have this in mind before going back to today's presentation. What happened yesterday? The price opened here 13,700. Right after the opening, the price, we expected some sort of buying here. Like that, it went up near 13,780, where it cannot hold or stay above that, and also we expected some sort of selling around 13,700. Again the price tested, and that resulted in a big selling. We expected selling, but the selling we didn't expect to this extent. So what happened? The price rushed towards 13,160. So there is maybe it's a spike, but you see the bounce back where it came up till 13,420 and 460. Now you should remember what I explained at the beginning of this session about 13,420 and 460. Okay, have that in mind. And finally the price closed near 13,329. So today it is expected to open somewhere near 13,420, and within this range. That was the reason we started our explanation with this range, what happened earlier. So there are two things you need to have in mind. You should pick the exact zone, you cannot trade in between. So you should be very accurate in picking the levels. So wait for the price to come near 13,460, go for selling. Okay, 13,460, go for selling. Since the volatility is high, the stop loss range will also be high, and go for selling till 13,520 by placing stop at 13,540, expecting the price to come down. So you will be going for sell within this range, maintaining 13,460 as a resistance. And you know the reason why we want to focus on 13,460, where I gave the explanation at the beginning of this video presentation. So that's one part. Okay, the second part is, if the price is dropping down towards 13,300, okay, near 13,320, you can go for buying by placing stop at 13,280, expecting the market to give you a bounce back. On both the levels and both the zones, you should pick the right area and book profit and exit from the market rather than holding your position. So you should be quite accurate in picking the levels, but I can explain why we want to book this why we want to go for buying at 13,300. Because it was a mid-range, the market went for some sort of buying. So what I feel is the two things. One is, if you ask that the price can continue selling, of course it will find some resistance on top, given the fact that you had a very big selling yesterday, and also there will be some profit booking, because 13,260, 13,200, these are all very major zones. So what we feel is, again the price will not come below 13,200. That is the expectation, that 13,200 or whatever low we had in the yesterday's trading session, maybe the price will come and test it again, but it will be very difficult for the price to stay below those levels. So it will be some sort of consolidation with some volatility. So pick the right zone, place your stop. So now let us move on and see how we can put that in the options market. Given the volatility, we cannot predict it exactly where the market, how the premium is going to be fixed. So 13,400 will be the at the money option for today. So two things. One is select 13,300 put option, wait for the price to come near, as I told, 13,420 or 13,450. Within this range there will be a bounce back. Wait for the price to come near this zone and see whatever price it is having, 13,300, maybe around 60 to 65. If you get that price around 60 to 65, you can buy this, so that you can expect the market to drop. you will get some gain in the premium value. That is one way. The second thing is 13,500. This is again 60 rupees. Maybe you will get that around, you will be seeing that around somewhere around 100. So the price will be opening there. So whenever the price is coming near 13,300, 320 levels, go and buy this call option in that strike, expecting the market to move up. So in both the sides we are going somewhat out of money options, so that we can corrupt that volatility, and there are chances these times the stop loss may trigger and the price can reverse, so we need to have sufficient buffer. So it's better to go for options. Since the volatility was high because yesterday we had big selling, it is very good if you can be the seller of options also. So let us see what's going to happen during the trading session, and thanks a lot for watching our videos. Happy trading. Take care. Bye.